Good afternoon and welcome to the TRUFIN PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO James Vandenberg. Good afternoon to you, sir.
Good afternoon, Alex. Thanks very much, and thank you everyone for joining today. I have with me today James Hussey, who's the CFO of TRUFIN. Thank you all for joining. As Alex said, what we're going to do is we're going to run you through our results presentation, and then we're going to leave plenty of time for questions at the end. So you can submit your questions throughout the presentation, and then we'll go through them at the end. We'll leave plenty of time for that. So to remind everyone, TRUFIN is a holding company. We've got three businesses, Oxygen, Satago and Playstack. We're going to give plenty of detail on these businesses later on in the presentation. But for now, Oxygen is the UK's #1 provider of early payment programs and other procurement software to the public sector. It's based in Birmingham and its CEO is Vicky Sloan. Then there's Satago. Satago provides invoice financing solutions and credit controls tools to SMEs in the UK, and its CEO is Sinead McHale. And then Playstack. Playstack is an award-winning games publisher based in London, in the US, and its CEO is Harvey Elliott. We own a majority, TRUFIN, that is, owns a majority stake position in each of those three businesses. So before we go into detail on the businesses, what I'm going to do is give you a very high-level, top-down view of the group's performance in 2024. So it's obviously a beautiful graph. I'm sure you'll all agree. So as you may remember from this time last year, we said that we knew 2024 would be a really good year, and we obviously didn't know quite how good it would be, and it turned out to be spectacular. And a lot of the revenue was driven by Playstack, but it was very much assisted by Oxygen yet again, as it has done in year after year. So what this growth has allowed us to do is just to not just turn profitable, but we turned profitable a full year ahead of market expectations, as you can see here. So 2024 was the inflection point for the group. We improved the EBITDA by 11.8 million. We went into profitability, not just going into profitability, we went into profitability convincingly. And it's a massive, massive milestone for the group. I can't tell you how important it is for us, because we gave commitments to shareholders that we wouldn't need any more external capital to reach profitability. And so it's a real pleasure to be able to say we've achieved that. But this is the past. What about the future? So 2025 has started exceptionally well. The first 2 months of the year, so that's January and February this year, we've grown more than 145% year on year. So I've got to give the caveat that Balatro and AB Factor, two of the big drivers of the revenue growth last year, they launched on the 20th of February and the 2nd of May. And so the comps later on this year do get harder. So don't do what my son did yesterday, which is say, Daddy, 14.8 times 6 is about 90 million pounds, because that would be, I've got to temper that sort of enthusiasm. But obviously, it's been a great start to the year. So we're all thrilled. And on that note, I'm going to hand over to James, who's going to just go through the 2024 numbers in a little more detail, and then we're going to go into the subsidiaries.
Thank you, James. So obviously 2024 was a fantastic year for the group. Revenues were recorded at 55 million, up from 18.1 million in the prior year. As James said, a huge contributor to that revenue number is Playstack, recording revenues of over 44 million as compared to 8 million in the prior year. Oxygen, very predictable growth, 25%. in the year, going from 6.2 to 7.7. Very predictable and increasingly profitable. Satago was the only negative from a revenue perspective. The loss of its Tier 1 bank contract in July impacting their full year revenue performance, and revenues went back from 3.8 million to 2.5 million. The result of that revenue, 55 million, is a net revenue figure of just under 25 million. The margin dropping in the year due to the sales mix, obviously a higher proportion of revenues related to games, attracting costs, developer royalties. But that net revenue number increased by 11.5 million over the prior year, and that fed through to an increase in the adjusted EBITDA number of 11.1. And the point being there is there hasn't been significant increase in operational costs, staff costs, to be able to support that revenue growth. The increase in the revenue, the net revenue line, has pretty much fed through to the adjusted EBITDA line. Staff costs, once you strip out share-based payments, increased by 200,000 pounds in the year, and there was an increase in the impairment charge. Other than that, it all fed through to an adjusted EBITDA increase of 11.1 to 7.6 million positive, as compared to 3.5 million last year. All metrics on the P&L profitable. Profit before tax, even allowing for the share-based payments, was positive. And indeed, the tax number, we have a tax credit in the year, as we're now recognising an increased deferred tax asset relating to the anticipated performance going forward of Oxygen and Playstack. So, very positive P&L. And actually, in addition to the deferred tax asset, there are 70 million pounds of tax losses within the group to utilise going forward and offset against future profits. Cash, final point to bring out for 2024. Total cash just under 15 million, 14.9, and unrestricted cash 13.6. So cash in a very healthy position. 2024, fantastic. What does 25 look like? Well, we've had a great start to the year. As James said, revenues are up in the first 2 months. Revenues just under 15 million, and growth year on year of 145%. Playstack increased over last year very significantly. That's 196% up, and Oxygen continues to be very predictable in its growth on the top line.
Great, thanks, James. So Oxygen. Just to remind you, Oxygen provides county councils across the UK with early payment software and other related software products related to procurement. It's got around just over 62 of the councils in the UK signed up. Average contract duration is 5 years. Very, very, very high retention rates of those councils. Phenomenal backdrop for what is a phenomenal business. So if you look at the graph, you'll see the EBITDA progression this year has been excellent, and we very much expect this to continue. I mean, and to James's point earlier about the 70 million pounds of tax losses, we acquired this business in 2016 when it had 40 million pounds invested into it already. At the time, it was losing 750,000 pounds a month. So you can imagine where this business has come from and where it's heading. So it's been an exceptional turnaround story. And the headline, we talk about operation leverage. What do we mean by that? In simple terms, how much of every £1 of revenue falls through to the bottom line? So in our case, last year we grew revenues by £1.5 million, and that resulted in a £1 million increase in EBITDA. So it's roughly a 66% operating margin. So what that means in real terms is for every £1 of revenue we generate, Oxygen increases its EBITDA by 66 pence. So the leverage we talk about is the result of that is the leverage comes from the fact that revenue increased by 25%, but the bottom line increased by 88%. So that's the leverage when we talk about operating leverage. And it's important to say that operating leverage is going to increase over time. So 66% is very much not the ceiling. But operating leverage is useless without revenue growth. So That is why this graph is so important. So this shows you our visibility over the next 4 years. So if you, what this graph says is that we know where the 85% of the next 4 years revenue is going to come from. It's going to come from existing clients we've already won. So to put that another way, if we didn't win another client ever again, 85% of our early payment revenues is already baked in from existing clients we've already won, which is obviously a phenomenal position to be in. And just a little stat on the right side, we are servicing, as of the end of last year, we're servicing well over 24,000. So we're accelerating early payment into the bank accounts of over 24,000 small suppliers and large suppliers, but predominantly small suppliers up and down the UK. So it's a phenomenal value add and social good we do for this country, especially at difficult times like this. So it's something that's a stat we're really proud of. And as of February, at the end of February, that number is now 27,000. So although nothing happens fast in this space, hopefully that demonstrates that's some of the sort of little early indicators to give you a taste of the future. So it's all very well us having 85% of the future revenue spoken for. What about the 15% that we haven't yet won? So in the pipeline, we have over 100 other clients that we're speaking to, this early payment clients. So we have won historically in the past about 6 councils a year, and we very much expect that trend to continue. So you can see why we're so confident on around our revenues for the coming years. And then you couple that with the operating leverage, and you can see why this is such an attractive business for TRUFIN shareholders to own today. This graph also shows you the new clients we won last year, some of the renewals of clients we had, and some on the other side of our business, we've got Insight Solutions, which is a data side of our business, and we won many new clients on that side of the business. So when we talk about 62 early payment clients, we don't talk about the data side. We've got many hundreds of more clients, but that's on the data side of the business. So just talking about Satago, I think we're just going to open up with, we're going to talk about the elephant in the room, which is Lloyds. So we're very cautious about, we've always been, and we will continue to be very cautious what we say about Lloyds. But there are 2 things I would personally like to say. It's been a complete, the news last year was a complete body blow to us, not just us at TRUFIN, but to Sinead and her entire team. So they did a phenomenal job building a phenomenal product, and it was a complete shock to us all. The second thing I would like to say, and I won't, please don't ask any questions around Lloyds because we won't be answering them. The second thing I would say is that Lloyds remain a shareholder of Satago, and we have a very, very good working relationship with the equities team at Lloyds. And so, I think that's important to say. And again, we won't be going into any more details about it, but we do have a very good relationship, and they remain a shareholder of Satago. So what are we doing now? Well, after the news that Lloyds decided to terminate their contract, we had 2 options. One was to bury our head in the sand, and sort of cross our fingers and very much sort of hope that another big contract will land. And the other option was to accept the new paradigm and grasp the nettle, and that's what Sinead has done with her team. So we're controlling what we control, and we're rebuilding. And what that really means is we're focusing on winning where we are today. So Satago has some incredible partners, and we're very lucky to work with them. So we're focusing on maximizing our relationships and the value we can generate with those partners. As you can see today, yesterday we announced a 3-year contract with our largest software reseller. Satago also won a contract with Distribution Finance Capital, and yesterday we also announced that we went live with a new embedded finance product for a tier 1 Portuguese bank. So the Lloyds, yes, it was extremely disappointing, but we've reset the business, not just in terms of our expectations for the business, but in terms of also the headcount. We've radically had to reshape the business in terms of costs, which we've done, and we took those costs in 2024. So we came into 2025 fresh, without any of those unfortunate costs that we've had to endure in 2024. And we have a very clear set of plans, which we're planning on executing this year and next. And as you can see, cash generation is very much our focus, and we expect Satago to be cash generative by June 2026. So, Playstack. So last year we said 2024 would be the year of Playstack, and it very much was. Balatro has sold over 5 million units, which is an unbelievable success. I mean, as of today, it's well over 6 million units. I mean, it's a bit like one of those annoying kids at sports day that wins all the medals. It scooped the Game of the Year Awards medal, the BAFTA medals, the Indie medals, the Golden Joystick Awards medals. I mean, it was just an extraordinary year for Balatro, and we're super proud to be involved with such an incredible developer as Local Funk. And our team has done an incredible job to really let this game shine, and to bring it to as many players as possible. And that is continuing this year and will go on for many, many years. But interestingly, though it was such success, it did take the shine of the incredible success of Abiotic Factor. So this is another indie game that we launched last year. It's another smash hit. It's sold over 1 million units, which is an absolutely enormous number for any indie game. So it wasn't just Balatro that sold phenomenally well. We also launched, and the team launched, Abiotic Factor and Rise of the Golden Idol, which is one of the part of our sequel of Case of the Golden Idol, the Golden Idol sequel. And that was another hit. We paid our investment on day one for that. So we had 3 launches last year, all phenomenally successful. So yes, it was very much the year for Balatro. But like the headmaster at Sports Day, I also want to give praise throughout the group. It was a phenomenal year. I mean, I think what is lovely is this year in March we also won Playstack won Publisher of the Year at the UK Awards, which is the industry awards in the UK. So that was lovely recognition for them and their team. So I think what gets this industry into issues and has done in the past is our poster enormous success. There tends to be a lack of discipline, and that's absolutely not happening here. So we are very much focused on the data. So I know I talked about these slides, these graphs in the past, and I'll just go through them quickly again. So what these graphs show is the purple dot shows our external investments. That's the investment we make in a game, an external investment we make in a game, which they're called developer advances, before we launch a game. So we make an investment and then we look to recoup that investment post-launch. The green line on each of these graphs shows you the revenue that is generated from that game. We get first recoup on the games before, and then our investment is repaid, and then the revenue after that is split between us and the developer. So as you can see, when the green line crosses the purple dot, that effectively means that we're making money on our investment. So you can see in the box below, we show some stats. So a hit ratio, I think to clarify, because there was a little bit of confusion last time, a hit ratio is not a game that is a hit. This comes from my hedge fund background. A hit ratio is how many, it's like a slugging ratio in American term. If you take a swing at something, have you hit it? And so in our world, if you make an investment of £100, have you made 100 plus pounds? So you've made £101 plus. If you have, that's considered a hit, as in we've hit our investment amount. And so you can see in over 90% of the games that we've launched, we've made our investment back. Our hit ratio is over 90%. And to be accurate on that, we've launched 12 games so far since inception. So that's without cherry picking. These are console games since launch. Launched 12 games, and 11 of them have returned their invested capital. And on a weighted average basis, which is the fairest way to calculate our return on invested capital, we have made well in excess of 300%, and well in excess of 200% IRR on our games. And those are extremely conservative numbers. Now, one interesting stat is we now know that Excel breaks at 1,256% IRR. So if you try and calculate a return higher than that, then Excel blows up, which is causing us some problems with a couple of the games and a couple of our investments. So it's been a phenomenal. Our data-driven approach to Playstack has paid off. This year, we've got 7 more games launching, and you can see that on the right-hand side of this graph, starting with Little Problems, Darkwater, Dawn Vale, and then we get, I didn't mention, Aviator Factor last year launched and sold 1 million units, and it's still only in beta. It's going to its full launch in June this year, which is and that makes it even more of a phenomenal achievement. And then we've got Unbeatable, One Move Away, and one game that's yet to be announced. So there's an extremely exciting pipeline of games coming up. I think one other thing to say, and this is not to get people too excited, but just to give people a taste of what we've achieved, and maybe where the future is. So far, if you look at all the games that we've launched so far, we've spent just over 2.5 million pounds in developer advances. These are the advances that I mentioned earlier, where we give external developers advances, and we launch that game, return that capital, and then we split the revenues in the future. So far, with 2.5 million pounds of developer advances, we've created a business in Playstack which is over 40 million pounds of revenue and 11 million EBITDA. By the end of last year, so the start of this year, we have over 7 million pounds of developer advances out in the world. So your money, which is yet to generate a return. Those advances are for games, these 7 games that are launching this year, and for games launching in 26 and 27. So I'm not saying that you should multiply, that 44 million is generated by 2.5 million pounds. Therefore, you should multiply that by circa 3 times to get to where we're going to be. But it gives you a feel for some of the potential for this business. And by the end of this year, we are budgeting, all generated from internal cash flows. We're budgeting that we will have over 10 million pounds of external development in games by the end of this year, and by the end of 26, it'll be over 16 million pounds. So to James's point earlier about having a very, very healthy cash balance, everything we've done, we haven't restricted the growth of these businesses. Yes, we are focused on cash generation, but we appreciate that the data is so good. If you trust the data, then you have to be making the sorts of investments we are in this business. And again, just to reiterate, when anyone says, gosh, you're going to need a fundraise to do all that. No, this is all from internally generated cash. So I think just to summarise and to reiterate, we've said it all before. We at a group level, we delivered on our commitments to shareholders. We haven't asked for more money to get to cash flow break even, and that's really been an important focus for James and myself. We've got cash on our balance sheet. It's a very healthy cash balance, and that's a growing balance. And as a business, we're profitable and cash generative. Oxygen is in incredible shape. It's a business any PE firm would want to own with this type of profile. It's got Satago is taking the medicine. It's bouncing back post the big reset, and it's focused on cash generation. And Playstack is remaining disciplined. We're trusting the data, and we're looking forward to another exceptional year. So the company is in rude health. And before taking any questions, I just do want to say thank you to all the people who've helped us get to this point. So the CEOs, Vicky, Sinead, and Harvey, and so their teams. We've got over 170 people of exceptionally talented individuals who have helped us get to this point. And you, the shareholders, who have backed us and trusted us. So thank you very much indeed. I hope you're happy with our progress. And with that, I'm going to ask, I think, Alex to move over to the questions.
That's great, James. Thank you both for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. James, as you can see, we have received a number of questions throughout today's presentation. And if I may now hand back to you and kindly ask you to read out the questions where appropriate to do so, and I'll pick up from you both at the end. Thank you.
Great, thank you, Alex. So I probably want to lean in because both of us are straining here. Question from Bobby. Bobby's got a few questions. So top one, at the end of December, the cash figure was 15 million. What is it now? We haven't said, Bobby, but I think we've alluded to the fact that it's a growing cash balance. So I think we should do that. Steal the question. Next from Bobby, you've got 7 games in development. Which is the one that you have the highest hopes for, and when is it due for release? So if you look at, there's lots of public data on wish lists, etc. So we're going to say what we feel is the game that is most likely, we think is most likely to perform, because that'd be tempting fate. But if you look at the wish list suggests Unbeatable, which is launching after the summer. And Dark Water, which is launching next month. They are looking like they have got, just in terms of external data, suggest those are the games that are most likely to deliver. Balatro, gosh, Bobby, you're stealing. Oh my word! I'm going to have to delete some of Bobby's questions. Bobby, Balatro, is there a new release?
This in the pipeline.
So we won't be talking about that. We'll be talking about any new releases for Balatro, etc. We'll be talking about the Playstack that we'll be talking about, and making sure that we get the full marketing benefit of that. So sorry, we won't be answering that, Bobby. If you've achieved 15 million in the first 2 months of the year, is the full year figure of 45 million pounds realistic? It seems very low, despite the comps versus 24. So I think Bobby's referencing the 45 million pounds from the analyst number. So he is forecasting that we make 45 million pounds of revenue this year, and we've done 15 in the first third. Yeah, so we've done a third of the revenue in the first 2 months. So Bobby, I think everyone can do the maths. That does seem like a very fair point that there's definitely scope for us doing better than that this year. Yeah. So Bobby also says Oxygen appears to have an interesting growth trajectory. What is your 5-year view in terms of the sales and profit expectations? So we mentioned the first 2 months of the year, Oxygen grew in excess of 20%, and last year it grew 25% top line. So I think that would be a fair, if you sort of extrapolate that out, I think that would be a fair way to look at it. And then I talked earlier about the operating margin and how that's rising as well. So you can then figure out what their sales and profit expectations are, because obviously that's not something we've publicly said. So Jack talks about the same question about the fact that the first 2 months of the year were excellent, and how does that place us for the rest of the year? And then goes on to ask, is there any reason to ask if Balatro or ABL Factor might fall very quickly? So there's no reason to expect them to fall any quicker than is normal for any game, and it's very pleasing to see actually they are outperforming the normal decay curve for games. So no direct answer to the question. There's no reason for it to fall very quickly. What are your views from Bruce? What are your views on value realizations and recycling of your portfolio? So we've constantly talked about making sure that we are looking to realize value for shareholders. We historically, if you look back at TRUFIN's history, we had started with 6 businesses, and now we've got 3 businesses. We've never bought another business. We've had some bolt-ons for the existing businesses, but never bought a separate business. So I think if that's could give you a feel for where we expect the future to go, but it's never good to be putting timelines, etc., on those sorts of things, because then it gives potential buyers, sort of unfair advantage. So I don't know if that helps you on that. I think Bruce, but I think that's where we've got to in terms of the amount we're prepared to say. Changing down. And Jack asks, he says, I was shocked, as well we, Jack, shocked at the fact the price fell yesterday on the update. Lots of companies are now doing share buybacks when they have excess cash. Now cash is consistently growing quickly. Why not take advantage of such low price? Do you want to do new deals? So it's a great question. As we said as I said in my statement, Jack, board has discussed at length and what to do with the excess capital we have. One shareholder during this roadshow said, don't be in any wild hurry to do anything, just breathe. It's lovely that you're in a position where you've actually got excess cash, but we do move quickly as well as a team. So I appreciate that, the suggestion of that, but we are all over it, Jack. We're thinking about it hard, and so thank you for prompting that. Something I know that many shareholders are also focused on. And do we want to do new deals? We absolutely do want to do new deals, as we did by buying bid stats for Oxygen and Magic Fuel for Playstack, etc. So yes, we are always on the lookout for bolt-on acquisitions for the existing businesses. Hopefully that answers your question. I think that's the end of the question. I know, just a little shout out to, I know Henry Kenner, our former CEO and chairman, is listening into this call. So Henry, I'm surprised you haven't asked a question, but hello from us. So that seems to be the end of the questions. So Alex, can I hand back over to you?
That's great. Fantastic. Thank you both for addressing all those questions from investors today. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. But James, before we direct investors to provide you with their feedback, which is particularly important to the company, could I please ask you for a few closing comments?
So I'm just going to reiterate what we said earlier. We're thrilled that we'll be able to deliver on our commitments and our promises to shareholders, that we wouldn't need more capital to reach profitability. We've got a very healthy bank balance, growing bank balance, but we're profitable, we're growing fast, as you can see in the first 2 months of the year. So we are in the best position TRUFIN's ever been by a country mile. So thank you all for your support. And Bobby says thank you. So thank you, Bobby, for your questions, for your multiple questions. And I just want to say thank you, Alex, for hosting this meeting.
Our pleasure. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of TRUFIN plc, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you, Alex.